Right here, we'll just come down to whole concept relating to prudential norms on asset classification and income recognition. Now, what exactly are we looking at in terms of your prudential norms on asset classification? As the title suggests, we are dealing with something about prudence. That is where this entire idea about prudential norms comes into picture. What do you think we are looking at in terms of asset classification? What is the single biggest income generating asset for a bank? Okay. Interest. A single biggest income generating asset is interest. The cluster I'm looking at what is that? Interest gives interest as an asset. Since when? Investment. Investment. Banks are there only for the purpose of investment. Deposit is not a source of income for a bank. It's a source of income for you. You place a deposit, you get interest. When you get interest in a bank, it's sandoshama. It's a bloody bank's cost here. Loans. We are looking only at loans. You open up any banking company's balance sheet. And let's say balance sheet total is say somewhere around 10 lakh crores. That will be the standard size. 10 lakh crores of the balance sheet size or 5 lakh crores of the balance sheet size will find that somewhere around 5 lakhs each for or 2.5 lakh crores or 3 lakh crores will be only as loans. We're looking at a 60% of balance sheet size only on loans that are being given by various banks. Banks are earning because banks are lending loans to various people. When banks are lending loans to various people, that is what would be the primary source of income. Banks do have substantial investments. Not to take away anything from whatever you said. They do have substantial investments. Countries' largest investors are only banks and mutual funds. LIC, for example, insurance companies. So these three said, mutual funds, insurance companies and banks. These three people alone would constitute at least say 30-40% of investment in various companies. They are such a big investor, such a huge investor. They do have substantial amount of investments, no doubt at all. But the primary income generating assets are what here? Income generating assets are nothing but loans for a bank. In the banking parlance, we use a term called as advances. We generally don't use the word called as loans. We end up using the term called as advances. And loans, there is always a confusion. Whether it is loans given or loans taken. Banks can also borrow money. You will get to know that one as well. And I'm speaking about borrowing which is not in the nature of deposit. Deposits are a bit different. Loans are a bit different. When we actually start speaking about your so-called loans given by bank, we will end up using the term called as advances. And therefore, try to remember this term and use only that term as much as possible. Please end up using the term only called as advances because that is the most appropriate term. And in general, you are safer by using that particular term. As I told you earlier, you will get to learn lots and lots of jargons. And these jargons can make or break your overall examination question paper answer sheet. And therefore, please ensure we are using the right term. So when we are dealing with advances are nothing but money is lent to various borrowers or parties or customers. Is it not here? Effectively, that is what it is. You are giving money to somebody. Is it not here? Which implies banks can, will, should recover these monies. Fair enough. That is what they will typically do. Everybody here. Can we therefore say that these are in the nature of debtors at some level? More like your bank's customers. Money is collectible from the bank's customers. These are similar to your debtors. That is what it is. Nothing else. We are dealing with something which is very, very similar to your debtors. Don't understand them in the context of trade debtors, sundry debtors, but similar to debtors. Don't equate them directly as debtors, but for the sake of understanding, you can have it as well. And what exactly is the biggest risk for any bank? Yes? $8,000 crores. 8,000 crores worth of money. And banks are clueless as to when they will get this money. Some are very clear that they will not get any money at all. Some have already, I think bank would be doing some multi-level yagams and pujas and rituals. ஒரு 100 கோவில தேங்காய் உடைஞ்சிட்டு இருக்கும் daily. When we can actually recover money from Vijay Mali. Biggest risk for bank is nothing but defaults by borrowers. Very recently, lots and lots of bank companies went on strike. They listed out, the size of delinquent borrowers who have not repaid the money at all. Some substantial amount of money, running into quite a few lakhs of crores which have not been recovered at all. Many bank employees went on strike because at the higher level, people are somehow lending loans on account of political pressure, this, that, etc. And banks' money is blocked in all these kind of places, and these fellows are hiding losses, covering up all the losses. Those kind of ideas are actually happening. It's huge. So what exactly are we supposed to do when we start having a potential defaults of borrowers here? What do we do? Yes? Therefore, we should create a provision. Simple deal. That's all. So ultimately, when I'm speaking about prudential norms, I'm only trying to hit something called as, boss, I have lent money. Since I have lent money, there is some degree of risk. Once I sense that there is some degree of risk, there is a risk of bad debts, then I have to definitely create some amount of provision. How much provision should I create? That is your whole idea. We will normally come across that, companies create a general provision of 1%, 5% and all. We don't deal with any general provision. Every single loan, independently, they will create a provision for loans that has been lent by these kind of people, advances that has been given. And banks are arguably the finest example of how efficient a system can be when it comes down to all these kind of records management. You look at all those kind of details. Sometimes their entire lives are so very bad that they'll be doing huge amount of documentation work on account of these kind of activities post their banking hours. Lot of us have been very skeptical as to why can't banks accept deposits till evening 5:30, 6 o'clock and all. As if like after 2 o'clock when they shut the entire banking counter, lot of us end up thinking. It's like very natural for us to think. But we'll realize that starting from 2 o'clock, sometime till 7:30, 8:30, 9 o'clock, these poor people will be focusing only on all these kind of documentary updations. So very huge. In fact, the very first audit that you do, the prudential norms will come and give you one bunch of papers. This bunch of papers will be somewhere around 3,000 pages. 3,000 pages, every single loan will be available with all these kind of computation. And you are supposed to review the entire thing. Will you review? Satyama mudiyadu. Sampling da. Auditing you have learned something called a sampling. You will pretty much do something similar to that. Point is that we are looking at some very significant little idea here, and all of us are required to certify, validate all these ideas, so get to know. At final level, you will learn all these ideas in much greater detail. My own focus right now is only to give you a core, brief idea about what exactly this is, and then straight away proceed further. Now comes the question, once I am understanding that, boss, I am dealing with some kind of debtor, debtors carry some amount of risk. Once there is some amount of risk, I should be creating something called as provision. Next question is what? Extent of provision required. This depends on something called as asset classification. What is asset classification? Yes. In our normal scenarios, we end up creating something called as good, doubtful, bad. Is it not here? Something similar to that will be creating even out here as part of your banking companies. Something which is classified and categorized and identified as patently bad will obviously create provision at 100%. Is it not? Something is pretty doubtful, you might create slightly partial provision. Something which is good, you may not be required to create any provision at all. Banks are also doing something very similar to that. They end up categorizing various advances into 3 major headings. So classifications is something like this: performing assets and non-performing assets. Some people use a word called as performing advances, non-performing advances. It doesn't really matter at your examination level. The classification is all about this, performing and then non-performing. And there is further sub-classification for the above. And that is what we will be seeing right now. So performing is pretty straightforward, a good asset. And non-performing assets and advances are nothing but something which are becoming bad, already become bad, potential bad assets, so on and so forth. So just be aware, we're looking at something about the entire asset classification, which is where we start straight away at something called as what exactly is an NPA. The biggest idea here, what is a non-performing and what is a performing asset? Performing assets are generally good. There are no material risks associated with their recovery. That is what your performing asset is all about. They appear to be good, they are good, there is no worries at all. What are non-performing? They are, yes, there is an element of risk, of default or high risk. Element of risk of default, monies may not be recoverable in full. The question is, how do we identify that? Yes, how do we identify what is performing and what is non-performing? How? எதை வச்சு கண்டுபிடிப்பாங்க? Face is the index of the mind. பார் மூஞ்சே பார்த்தாலே கண்டுபிடிச்சிருவாங்க end of stuff. Or how? How do you go about identifying here? Because when we actually come down to real legislations and laws, we will come across instances that we cannot actually rely upon something called as professional judgment kind of stuff and all. These are to be identified on a standalone basis. That is what we will technically do. There are objective tools for measuring what exactly is an NPA. What exactly is an NPA, guys? You will realize that we are identifying something called as non-performing based on only one condition. Generally, something about performance, the track record. What track record do you use? Last 10 years, 20 years? No, we use only a 90-day time period. That is all. So when you start learning something about non-performing assets, you will learn that there is this glorious idea about 90-day cutoff for most loans. For some loans, you'll come across a 180-day cutoff, 1 year cutoff, education loans, 6-year cutoff. But you will get to learn all these ideas. What exactly is a non-performing asset? NPA, a general rule. Any advance on which interest and or principal is overdue for a period exceeding 90 days. That is what it is. I'll demonstrate by way of a small example, and I want you to thoroughly understand that stuff. Any advance on which interest and or principal is overdue for a period of 90 days. So the concept is what there? Overdue. We are focusing only on something called as an overdue, and how do we go about quantifying that is what really critical. Because most banks do not properly categorize every advance as non-performing account. That's the sad reality. If a software can automatically do all these kind of things because it is mathematically possible, then why is that most banking software do not do that is anybody's guess. Nobody wants to portray the real picture, which is pretty bad when it comes down to loan. And we think that only Vijay Mallya's of the world are the one who are looting, all these banks. Will actually come to know that there are lots and lots of small people. You, me and people of our own ilk will find that these fellows are also borrowing money, not repaying at all. Vijay Mallya is a bigger, what you call it as a scam because the amount involved is pretty huge. It doesn't take away the fact that there are small time thieves and thugs who also borrow money, but don't repay at all. N number of reasons, but they don't repay. Any advance on which principal and interest is overdue for a period exceeding 90 days is deemed as what? Non-performing asset. I'll just give an example and then let us straight away start looking at this entire idea. And again we have to build. Let me say that A Limited borrowed rupees, say 10 lakhs from SBI on some date, say 16th September 2014. This is your deal. A Limited borrowed 10 lakhs from SBI on 16th September 2014. We'll simply say that interest is that, let's say, somewhere around 12% per annum to be served at the end of every month. And the principal repayment is rupees 1 lakh asset every 16. This is a very simple scenario that I am giving you. Principal repayment is like, 1 lakh every 16th. Every 16th you are required to pay 1 lakh, 1 lakh, 1 lakh, 1 lakh. Interest should be paid at the end of every month, which implies for 16th September when you are going to borrow, 30th September you should be paying interest for that month. That is how the whole idea is all about. From this, what exactly is the idea, guys? We know that due dates for interest is 30th September followed by 31 October followed by 30 November, 31/12. Is it not here? Is there a due date? Then due dates for principal 16. So 16/10, 16/11, 16/12, so on and so forth. Are we clear about this, guys? These are your due dates of your so-called principal. Now look at that statement. Any advance on which interest and or principal is overdue for a period exceeding 90 days. Let's say that in this particular question that A Limited repaid all that was due till say somewhere around 31st December. And thereafter, not a rupee paid. Now what exactly will happen? Now we are required to understand. Shall we start? Everybody here? Now follow this idea. Till 31st December somebody has paid. Now what is the next due date? Due date for what? Interest or principal? Yeah? Principal. 31st December you paid everything which implies the next thing that is actually due is only your interest. That is what we are required to do. So in this particular question, what's your principal? In this question is principal due on 16/1/2015. Are we clear here? Everybody? Now follow this entire idea very carefully, then we'll proceed further. Once principal is due, we ignore interest. This is first starting point. This is 16/1. From this we keep on counting 90 days. What's your idea, guys? End of 16/1/2015, we say that what? Principal bar interest overdue for how many days? 1 day. End of 16th. 16th pay panlana, 17th is technical, put it, let's say, on 17/1/2015, principal interest overdue for 1 day. 16th I should have paid. If it is not paid, next day it is overdue for 1 day. So like that I can identify that on 18/1/2015 it is overdue for 2 days. Is it not here? Like that, you have to keep on counting till 90. On 91st day, it will be categorized as non-performing. So what's your count all about? You'll find that starting from 17 till 31/2015, principal interest will be overdue for how many days? Then, as on 28/2/2015, overdue for 43 days. Then, on 31/3/2015, come on guys, yes please, 74 days. And then, somewhere in the middle of March, we'll realize that we are pretty much crossing the so-called NPA limit. So let me mark it as this way. On 16/4/2015, principal interest overdue for 90 days. On 17/4, for how many days? 90. Now, I just try to trace the entire idea about what exactly is the due date and what exactly is overdue. And we are focusing only on this idea called as overdue. Bank due date to what you call as no grace period enter. You have to pay interest on a particular date you are supposed to pay. Because these are transactions in money, not in goods, wherein people can give you credit period. Interest and demand period will give you credit period of 3 months and all will never happen for a bank. Then you are supposed to pay. Now what exactly is the deal, guys? We will realize that in the books of SBI, advance to A Limited will be shown as performing asset or so-called good asset till what date? 16/4/2015. As from 17/4/2015, it will be shown as non-performing. You're able to follow, guys? Which implies that technically given a time limit of 90 days to prove that you are actually a good chap. 90th day you are going to pay, then no worries at all. So you're technically looking at a 90-day cutoff in this particular fashion. Are we clear about this? Yeah. You're focusing on what here? Interest bar principal, which is overdue for a period up to 90 days. These are called as performing. It crosses 90, steps into 91st day, they're automatically becoming non-performing. Will a banker wait for every single loan till 91st day? The answer is technically no. They won't be doing on a daily basis. Theoretically, they'll be hitting every month end. As on 31st March of every year, as on 31st January, or as at the end of a particular month, they will try and identify which and all loans are overdue for a period exceeding 90 days. Which implies, even though legally speaking, we're looking at 17.4, this will be identified as NPA only as on 34. 34 they will review. Okay, in the maso, the loan to A Limited has crossed 90-day cutoff, and therefore let me start categorizing NPA from this month end onwards. That is how it will practically happen. But keeping practicality aside for examinations, we cannot speak about that. We can focus only on the legal provision. Are we clear about this idea, guys? Everybody, so what is good and what is doubtful, or what is performing, what is non-performing? We have one single idea called as a 90-day cutoff period. Fair enough? Everybody, guys? Yes? This is your general loan. It can be any installment. Don't think that is only interest or only principal. It can be either interest or principal or a combination. Edavadhu due, cost karati mudinju pochu. This is automatically deemed as default. And then start counting all your 90 days time. Clear, guys? Yeah? Remember this particular rule. Shall we move on? Yeah? So put it in a nutshell. I just want you to understand that what exactly is an NPA. Once again, NPA is nothing but any advance on which interest and or principal has remained overdue for a period exceeding 90 days. Such advances are categorized as NPA on what day year? On the 91st day. These are legal. Real world, you won't find all these things happening exactly 91st day. It is technically done as at every single month. The system will provide you facility to identify on daily basis also, but highly impractical. You know, bank fellows are actually forced to do so much amount of reporting that start thinking whether these people are running some printing company or banking company. But in general, please remember it's on the month end. Theoretically, it is on 91st day. Are we clear, guys? Everybody here? This for generally most loans. And from an examination perspective, I'm not going to dwell upon all types of loans. At final level, when you start your articleship, you'll realize that there are far more different types of loans on which you will understand 90 day in different fashion. I focus only on two items. How to identify NPA, general, and something about agricultural loans. So in our country, agricultural, anything to do with agriculture is often considered to be sacred. Really, as much as education is considered to be sacred, agriculture is also considered to be sacred. I told you that there are huge amount of default in multiple borrowers. Some of the biggest default are there only in education loans and agriculture. People don't repay. Simply, for n number of reasons. Sometimes genuine, sometimes not so genuine, sometimes hoping that there is a farm loan waiver happening and you will realize that this farm loan waiver is helping only some big ticket political farmers and all across the North India. All these things will happening. But agriculture loans are always deemed as special. That's the point. What is the special, sir? Out here, any advance on which interest and or principal has remained overdue for a period exceeding one crop season for a long duration crop or two crop seasons for a short duration crop. Note this carefully, we are not giving it in terms of number of days. We are giving it in terms of an idea called as crop season. The long duration crop is typically which will take a period exceeding 6 months. There are some set of crops. I am not well versed with all this agricultural stuff. There are some set of crops which takes more than 6 months, 7 months for them to harvest. Those are technically called as long duration crops, and short duration crops are technically speaking less than 6 months. And there are n number of crops which happens within a period of 45 days, some within 75 days, some within 60 days. We have all these kind of models coming into picture. The different crop will decide what exactly is the period for us to consider for the purpose of NPA. எதுக்கு சொல்றேன்னா, the last idea depends on the place at which the lender is located. For example, down south we might be having a long crop season for a particular crop. Say, I do not know what the status of rice and done, I'm just hazarding a guess. Supposing say that paddy harvesting is going to take 7 months in our place, down south. Any person who is lending money for harvesting paddy will find that these fellows are evaluated based on a 7-month cutoff for identifying what exactly is NPA. சரியா யார்? அதே இடத்துல somebody is having some other long duration crop which goes for 8.5 months. That loan would be evaluated using 8.5 month cutoff. Then you find that the same place somebody is having a crop for 5 months. 5-month crop, manjal or whatever, turmeric these people are having. And there is a 5-month cutoff or 5-month crop season period. You will find that loans given for that activity would be evaluated using a 10-month cutoff period. Why? 2 crop seasons. Once it is a short duration crop, we'll go by 2 crop seasons. Once it's a long duration crop, we go by 1 crop season. Are we basically clear? The point out here being, what is the duration of a crop season? No fixed answer. It changes from crop to crop and from place to place. It's very difficult. We just need to remember that we are looking at something which is totally dependent on what is there in the real world. We cannot find out any specific answer. People are well versed with agriculture, the entire process of different crop seasons will be able to answer. And generally not, but the whole logic is only this much. You can, get all these kind of details by googling around a local BAO. He will be in the position to tell you what exactly is crop duration and all. But in general, remember this law alone. Are we clear here? Everybody? So for examinations, knowing what exactly is an NPA, you will effectively looking at these 2 ideas. Either Tavara, you got mortgage loans, you got moratorium loans, you got something called as education loans, n number of other loans which will happen. My point of view is only one thing. For examinations at Ipcc level, remember these 2 ideas. The general rule and one special case. There are at least 5 or 6 more special cases and I don't even bother about them. You'll definitely get to learn those ideas at your final level in auditing paper. Not from me, not from the accounting faculty, who it is going to be. But whole point what here, you'll be learning it only at your auditing paper. You'll definitely learn, even before you learn in auditing, you will learn it from your principal at your office as well. 100% probability. I just want you to appreciate this logical only. So mark this idea as very important for examinations. Make a note. This alone. I don't want anything else. Quickly make a note here.